All right, Arvind SmartSpaces, that's the company which is in focus right now. And we are joined by Mr. Singal to talk more about the company. Uh, Thank you very much this afternoon to talk to us. I see your numbers have been pretty good. And of course, the cycle is also favoring. Your pre-sales are good, collections, etc. Talk to us about how the quarter was. And also, now sitting here, what's the visibility for next year?
Sure. Thank you very much. As you said, quarter has been absolutely great. So has the year been. In fact, we saw some record numbers being achieved by the company on various parameters. For example, fresh sales touched more than 1,000 crores, 1,107 crores to be more precise for the year for the first time. We had a very healthy collection at 876 crores, which is up by 46% as compared to last year. At the same time, free cash flows were very healthy. For the year, we generated 458 crores of free cash flows, which was more than double as compared to what it was last year. So were the quarterly numbers, 32% growth in fresh sales, 14% growth in collections, etc., etc. So all in all, quarter and year has gone very, very, very fine. I think real estate in general in India is going through a great cycle. And the good thing is that this cycle seems to be very sustainable and widespread. And hence, from where we look at it, it seems that the momentum will continue. In fact, there are all the signs to conclude that this growth and this momentum across the industry, and especially for the organized players, is here to stay, and it's very, very sustainable. And we have been seeing a growth of 30 to 35% in most of our operating parameters in the last few years. And we hope that we should be able to continue with that in the coming year as well.
Fair point. Good to see that you're positive about the cycle. I just have a quick follow up on since you spoke about cycle. Where in this cycle are we right now in terms of demand supply? Quality demand is still outstripping supply. Probably that is the reason why companies such as yours are posting good numbers. But do you see durability of this cycle another 2 3 years plus sitting here? Or do you think that supply will start catching up? At least certain parts of Mumbai seem to be suggesting, for example, but in areas you're operating, what are your thoughts here?
Yeah, sure. I mean, in our understanding, we are nowhere close to coming towards the end of the cycle. In fact, maybe we've not even reached halfway through. In all probability, we are somewhere close to the middle of the cycle. This time, the cycle is very different qualitatively. I mean, most of the demand is driven by end consumption. It's not heavy on investors. Very, very widespread across cities, across markets, across price segments, etc., etc. So we see this cycle to be very, very sustainable. And next 3 4 years are something that we very clearly see that this momentum will continue. And in our markets, of course, it's great. Micro markets apart, there could be some few things here and there going in specific markets, but in general, across cities and especially in cities like Bangalore, Ahmedabad, Pune, etc., etc., I think there is a very, very widespread demand, and this is here to stay.
Also, I want to understand how are the realizations. Uh, because on the one hand, like cement prices haven't gone up for 15 years. At some point in time, they'll start coming in. We understand that the quality workforce is saying, higher wages because inflation. Uh, the raw material part on one side, marketing distribution expenses on the other side. Are you able to get better pricing on your incremental projects? How is the scenario, cost to pricing scenario?
Yeah, I mean, sure. There are basically three components we are talking about here. In terms of absolute pricing, I think they've gone up to the extent of 8 to 10% across markets, across the product segments. That's what we've also seen. Price realizations come from one, the generic growth that the economy sees, and that's healthy at 8 to 10%, as we just discussed. At the same time, your product, your locations, your package, etc., plays a huge role in optimizing the price that you realize from the market. That's the internal part of it. Coming to the cost side, raw material cost is very stable. In fact, they have come down to a certain extent in the last couple of quarters. So it's pretty stable regime as far as raw material is concerned. Two costs which are possibly going up a little bit. One of them is obviously land. Land is land is responding to the kind of vibrancy we see in the end product market. And of course, it has to respond. Landlords always would be aware of what is happening in terms of sales and momentum, etc. To that extent, it is coming. But then we are more than able to absorb the kind of increase which is coming towards land costs. And then, of course, as you very rightly mentioned, labor cost also keeps going up gradually in an economy like India, where more and more jobs are being created. A certain amount of growth is healthy, good, and that's what is happening. But apart from that, a combination of these three things, I think the margins are very well protected, and it's a great situation to be in as a developer, as a supplier, and also it's a great thing and great time to be from the consumer standpoint, where affordability index also is pretty healthy.
All right, Mr. Singhal, thanks very much. Great chatting. Good luck for the momentum.